Hi everyone, welcome to another Learn, Grow, Invest meeting. My name is Jermaine McDonald. I'm the founder of Learn, Grow, Invest. If this is your first time here, welcome. We have another great meeting for you. So what we want you to do right now though is be sure to share this video, subscribe to this channel if you have not done so already. Share the video with at least 10 persons. Everyone knows 10 persons. Share it with 10 persons and let's get everybody together and let's learn how to be better investors. So as customary for us, I'm going to open with a brief word of prayer and then we'll jump right into it. So Heavenly Father, we thank you, Lord, for this day. We thank you for the aptitude and the ability to invest. So Father, we pray that even as we go through this session, you will be with us, that you will give us wisdom to use the information that we will learn to become better investors. And I pray, Lord, that we will understand that money is in fact just a resource and we're to use it for the benefit of ourselves, our family, and for your kingdom. In Jesus' name, amen. All right, guys. So again, for those of you who are just joining, I'm asking you to share this video with as many persons as you can. Help us grow the community. Today, we're going to be talking about investment strategies, and it's not going to be the typical video. And this was my specific request of the guys I'll be presenting here today, because there's this kind of thing that happened to me when I started investing, is that more than just knowing which stock to buy, you want to understand the strategies that can help you sort of level up your investing. So that's what we're going to look at today. Some of the things that persons don't normally think about and some tools and resources that will help you. So this is actually a complement to the meeting we had 2 weeks ago with Andre Thompson, where he spoke about investing strategies. This topic we're going to cover today is a little bit, it's sort of like that, but you're going to get information here that we weren't able to cover in that one. So this one is definitely useful as well. So, make sure you get your notepad prepared to make some notes. And yeah, so we have with us today, two guys from I'm not sure how many guys are in this group, I'm honest, from the 876, community. And, I've been hanging out with them for the last few months since we met in January. And I've learned a lot from them. I'm confident that you guys will learn a lot from them as well. So I'm going to invite Justin and David to join me.
Okay.
Hey guys, welcome. So I'm going to hand over to you, Justin, to kind of introduce the 876 community, tell persons, who you are, what you do, and yeah, it's over to you from there.
Okay, perfect. So once again, welcome everyone. My name is Justin Scott. I'm joined here by my colleague,
David Nunes.
Mr. David Nunes, and we are essentially some of the founders of 876 Invest. And 876 Invest started off as a bit of an investment club between friends until we really understood the impact of what it is that we're doing right now. The attitude of having financial literacy, making use of the resources you have available, and to turn them into something that could be a lifelong hobby, strategy, or source of income, or really and truly something to really just bring Jamaica up in terms of its reputation, its earnings, or on all these things, right? So 876 Invest, our goal is really to make Jamaica synonymous with investing through different financial securities, through different methods, and through generally just raising financial literacy.
Definitely.
Okay.
I second that message.
Right. So, really and truly, our presentation here today is to move on a bit from the typical beginner investor stories or about the basics of what exactly is a stock and some of the light investment terms, and more into investor strategies. Some from our own personal experience, some from literature that we've been reading or some of the research that we would have been doing. And because there's never really one style as relates to investing, there are several ways you can go about it. There are many ways to peel an orange, and you can all just use what works best for you, relating to your particular style, to what the time you have on your hands affords you, or based on your stage that you're at the current moment and want to gradually get to a point of being a master investor, right? Great. So without further ado, let's continue this conversation. Let's continue the presentation. Just a quick brush over, to be honest with you. Everyone's here is supposed to know by now what are stocks. Stocks are shares, are pieces of ownership in a company that you can purchase over the exchange markets and hold on to these securities to benefit from capital gains, which is the increase in the price, increase in the value of the stocks, and dividends, which is a payout made by the companies to all the stockholders. Basic stuff to how you get started. You need a T.R.N, a valid photo ID, proof of address, references, and amount to start investing with. So the different types of brokers, where they want to invest with Barita, JMMB, NCB, Proven Wealth, Sagicor, they all give you around the same experience, but it's up to you to determine which one you want to use based on your own personal preferences. And so let's get right into it. So before we can get into investor strategies, we must know what exactly are we looking for as investors, right? So as an investor, you want to ensure that the company you're investing with has healthy financials. Financials referring to the income statement, the balance sheet, the cash flow analysis are the basic representations of how the company has been doing. The income statements is a representation of how much they've been earning, how much they've expended, and how much they've returned as profit, right? That beautiful word right there, profit, that we love to hear as investors. We need to know what are the changes within the company or the universe which the company operates within. So these are very important as it gives us an indication of what the company is going through at the moment. How are they trying to change, or how are they being changed by circumstances? How are they adapting, right? Because as investors, as shareholders, we want to always ensure that we are confident that our companies are agile, that they're able to adapt to changing situations, that they're able to make use of the situations presented with them and to continue to grow. Because as shareholders, we account for future value, not necessarily present value as things are today, because the moment you get some information, by the time it reaches your hand, it's probably a little bit old. So you want
it's priced in already.
It's priced in already, absolutely. So all of our so once an information has been put out, has reached towards the news sites, whether it's the L.E.A.R.N or whether it's JamStockX, the website itself, or other forms of media, you need to understand that this is available to everybody already. You need to now look for what is coming next. What is the next big thing? What is the next big break that's going to provide me with some more value?
So
okay.
That would be, without so much to say, that second one that you just mentioned, Justin, is a very important one right now, because the change in the universe which companies operate, we can say there's a drastic switch since the onset of this COVID. So that is a very good example right there for a lot of companies to look into. What have they invested in? What are their next maneuvers in order to mitigate the struggles of this COVID? So that's interesting.
Absolutely. Absolutely. You need to be able to understand which companies were hurt by it and which companies are seeming to benefit from it, right? So that actually is a nice segue into the third point, solid opportunities for growth. For example, Mailpack, brilliant example. I love the company. I love making reference to it. When we had our lockdowns, persons weren't able to go back and forth between other countries overseas to purchase and fly back down with their goods. So people had to now turn to the shipping services more. And as well, Mailpack had actually diversified into expanding their grocery delivery services. So they actually have a deal with some supermarkets where you can be on the website, you select what you want for your groceries, and it's then now delivered to your home. So a lot of people started taking it up since the March, April months thereabout. And some people have even stuck to it. You know, it's been a nice change for them rather than going into the hustle and bustle of supermarkets every day, right? So it's a great example. And then now you have the future plans. You need to always be on the lookout in the media, in the news, the Gleaner, the Observer, Loop News. You need to always keep abreast of the information and the changes that are happening around you so you can have an idea of what are the managers, the directors, the executives behind the companies looking towards. What are their plans? What are they heading into? And how can you spot, project, and benefit from these plans? Okay?
And a good indication of this is how we've noticed that now a lot of the banks in Jamaica have gone on to change some of the locations to cashless, which is a high indication that the future plans of these banks largely going forward has to do with a lot of contactless transactions, which in essence can also make transactions much quicker and at the same time much more efficient. So that's another interesting one. Future plans. Great to look towards.
Right. So here is a slide I prepared for what to look for once you've started investing. So this is a great example, okay? So here to your left, you'll see Seprod finally shed sugar, earnings resilient. And this is in reference to the sugar arm that Seprod had been that Seprod had been invested in for a long, long time, and they've been losing based on a lot of factors relating to sugar trade, whether the gradual decline in prices, the increase in expenses that was costing them, and generally sugar just hasn't been as profitable since quite some time, right? So
Yeah,
what
not
they've been doing was they've been shedding sugar, they've been closing down the operations and trying to get rid of those losses. They're trying to cut those losses off, and they finally got rid of it earlier this year, I believe. Yeah, right.
no, they had cut out sugar from last year, the last quarter, last year.
Okay.
So that is where they got sugar off the books. And we had started to see the benefits of it in Q1 of this year. So that's how we've seen such monstrous performances from
Separate.
Seprod this year.
Right. So it was operation costing them millions of dollars, and they decided to say, hey, this is just too much for us, so we need to cut it, let it go. And it's done so, and it's been having beautiful results on their performance. In addition to exports. So here from June 8th, the Jamaica Manufacturers and Exporters Association would have hosted Congrats, Surge Milk and Export Opportunity to Trinidad and Tobago. So Seprod had started exporting their Surge Milk products to Trinidad, which is great for foreign exchange, it's great for branching out within the region, and it's great for the bottom line, of course.
Yes, so right here, what we talk about now, Justin, goes back to our previous slide of what we were talking about looking to future growth. Because as we would have seen in 2019, which we would speak about as 876, saying that basically sugar has been costing separate billions. And the removal of this would obviously do well for their bottom line. So here, the where we're talking about future, we can now see it happening in front of us because some of us are still separate shareholders. And now we can look that separate is actually you taking advantage of this COVID market and getting into disrupted supply chains, just
Right.
like in Trinidad there, which probably wouldn't have been available to them if this pandemic hadn't gone. So this is one example of one of those companies that was ahead of the curve and utilized this time of uncertainty to their benefit to get their products out to various jurisdictions, various countries, and ultimately new markets. So this is a very good example.
Exactly. So You would have been hearing about it from last year. Cutting the sugar here, May 13th, you would have seen it in Pleno. They finally shed the sugar. June 8th, JMA has posted, hey, they've started expanding. And then, you've had all sorts of different indicators within the news to really point us in the direction of their performance. Okay.
Yes.
So, here we go, the results right here. So by the end of September 2020, we'd have seen a drastic change in the results. Huge increase in revenue, over $2 billion in 3 months, and over $4 million comparatively. When you're looking at 9 months ended September 2020, 9 months ended September 2019, and you can just take a look. Well, actually, you can watch it and pause it and look at it on your own time, and just take note of the drastic changes in the financials. So here we see right there, net profit. 3 months ended September 2020, $1.28 billion. 3 months ended September 2019, a loss of $179 million. So that's crazy. It's a massive change, especially considering, even looking over that the 3 months in 2020 being 9 months of 2019. And trust me, the signs were there. Signs were there out in the media. They've been giving us indications, and they've been leading us to the results that we have before us today.
Definitely. And the good thing was that Seprod actually carried through on all of its plans. Because if you look on every quarter that they actually put their results out there, their CEO was good enough to the public to show them that, listen, this is what is causing our losses. I want you guys to see that. And I want you guys to understand that we're taking steps to mitigate these losses. And then with the cutting of the sugar and then the reflection in Q1, this should have given shareholders a mighty sense into what Seprod really had in store. I mean, the consolidation of the dairy operation. I mean, with all of that, you could see that Seprod was just on the road to really break out and become a dominant force in the manufacturing sector. And of course, their performances and their performance has basically spoken for itself so far this year, as we've seen. Over 100% increase in their numbers, revenues. Come on, they are really doing well year over year.
Massive,
And
massive.
in a pandemic like this, not much companies have this to say. So it goes well to show how future planning really helps in your investing and adapting to changes and looking at companies that do well to pivot in times of need. Because as we knew, a lot of what happened in the COVID was people started to focus mainly on consumer staples. And of course, we know Seprod as a consumer staple company. I mean, just look on those results.
The numbers don't lie, they speak for themselves, right?
Numbers don't lie.
Absolutely. So, and this is a nice representation of what these events would have meant for price. So I've actually outlined on the chart right here what the price was at the date when the news clippings I would have had before were presented on price. So we would have first, boom, Seprod shed sugar, boom, June 8th, increase in exports, boom, the dividend payments out in September, and then finally, results. So you can see quite a nice rise. So if you would have seen the signs from as early out as March, April, May, thereabouts, you'll be sitting very pretty right about now.
Definitely. You see that dip right there in March? That was the onset of our COVID.
Exactly.
Yeah.
Exactly. So
Times of fear.
Yeah, that's also a very important note to get out there. Remember, guys, buy the dip. Don't, if you're the type of person to be a long-term investor, don't always get a bit fearful or a bit skittish about seeing a drawdown in price. Sometimes that's just a great opportunity to reposition.
Yes, because this pandemic well, the year isn't over as yet, but however, in the 2008-9 financial recession, our equities market was actually the worst performing, and we were down negative 50%. And so far, we've seen the market hover around negative 29% year to date so far. So compared to previous situations, the market did not overreact as compared to 2008 for this occasion. So, I mean, it wasn't as bad as we feared. A lot of companies came with results that we see so far, and we're like, okay, there was a bit of overreaction. As you guys can see there on the chart, where we can see between March and April, that huge dip there, a lot of uncertainty during those periods. But what happens with the markets? They always bounce back with good companies. Good companies always come back, no doubt.
Absolutely.
Because as we said earlier, Justin, results won't lie for good companies. So
Exactly.
back on the Seprod trade. Well done.
And to be honest with you, even with overreactions or certain dips, when you look at them year over year or quarter over quarter, it's just that much of a stark difference. When you notice, for example, certain companies would have produced lackluster results in some of the previous quarters this year, but take a note of them next year. If they're really hungry for it, if they're really focusing on pushing out value for their investors, then next year, year over year, the the results should be beautiful. Right? For good companies, that is. But I don't know if you want to run through IPOs, APOs, stock splits right now, or we can cover that a little later. What do you think?
We can get back into it because it will tie back into some of our
Right,
reasonings.
right. So, as I said, as investors, rule the reason for being our whole thing is to get ahead of the curve. We want to be there first. We want to be buying when everybody's selling or selling when everybody's buying or that's paraphrasing the quote, I'm sure. But really and truly want to be getting ahead of the curve, making use of the news, which we have just presented earlier, making use of the clean articles, making use of social media, as you'd have seen Jamie posted on Facebook. It's actually a nice little way you can go about it. So what you guys should do is to practice following the social media platforms for all of the relevant organizations, whether it's Jamaica Stock Exchange itself, whether it's the brokers, for example, Barita, I know they're very active on social media, whether it's the companies themselves, um, or the organizations which operate around them or would have a direct interest in them. For example, on the stock exchange, we have quite a few manufacturing and distribution companies. In fact, we have a index for it, which is the Select M&D or the Class C shares, I believe. Could be Class B.
B.
But yeah, Class B shares. So it's actually an index, a basket of the manufacturing and distribution stocks used to track the general performance. Okay. However, the JMEA would actually have a direct interest in putting out the information for all these companies looking to do their exports or any changes, anything interesting that you might want to know about. You should have some of the agencies around there, and you can do your own research, figure out which ones might work best for you, and to just make it a part of your daily life to check the information, check the news, do your research, right?
Tracking the financial portfolio. That's an interesting one there, Justin. And
Right.
that one will help you to monitor your gains, monitor your losses,
Mm-hmm.
and basically have an overview of how your portfolio is performing. That's very important step to um, bringing yourself to be a better investor at the end of the day, because it automatically will show you what's your position, and if you had goals, if you've hit your goals. So tracking financial portfolio is very important.
Absolutely. I don't think a few days goes by without me making some adjustments, recording the different buys or sells that I've made, and it really helps to keep an idea of your average price, because a lot of us will be going into the market, buying some shares, we put it down and we check on it sometime later, and perhaps we see some movement and say, aha, we've made some gains, or oh no, it's falling down a little bit. But sometimes you might get lost in the processes of all the times when you're making purchases and sales, and you get a little bit, and the lines get a little bit blurred. So it's great to know exactly where you're at. What is your average purchase price when you're buying into these companies? All right?
Yes, definitely. Especially if you're the kind of investor to invest, for example, monthly, where you continuously buy a stock. You're not buying it for the purpose of, say, okay, you want to achieve a certain price target. You're just consistently investing.
Right.
When you track your financial portfolio, and this will help you to have an average or average understanding of where your average price of purchase will be. Because if you purchase every single month, your average purchase price is going to move. So that's
Exactly.
very important.
Exactly. It's great for having an idea of how far you are from your goals. How far off are you from your goals? So it's very important to have a very strict idea of how much it is that you're looking from this investment. What is your what is your idea of a successful investment, right? When it is that price has moved to a certain point, that is when you're going to determine, okay, do I stay in this investment? Do I continue buying?
Yes,
Do I sell out some here? Do I trim my position? You need to know what type of
definitely.
investor you are and where you want to be, especially in price moves.
Definitely, because I mean, people think of stock as long-term instruments. Yes, it's long-term instruments, but however, sometimes we can actually go into stocks with a perceived notion of where we want to be in terms of appreciation. Okay, we go into a stock and we're up now 100% and we don't know whether to cut the stock, keep the stock, and that's because we never went in there with a plan. We never
Mhm.
went in there saying in our mind, okay, I'm going to ride this stock straight to 10,000%, or even though that sounds crazy, it can it's very much possible. I mean, look at example Barita. You know, if some people had Barita from as early as, let's say, even 2018, you would be up massively, more than 400%. But going back to knowing when to understand, okay, this is my point of inflection. This is where I look at it and say, okay, yes, I'll take my gains based off of current situations or based off of what I have set out to achieve. So it's very important to understand where you are. It helps also to mitigate losses because let's say that as an investor, you're not very high risk tolerant. You see a stock going down, for example, 15%, and you say, okay, my I'm willing to cut my losses if this stock goes down 30%. You definitely want to keep abreast of this because you don't want to be caught in an industry where, let's say, it has mitigated COVID well and is definitely failing.
Exactly.
So you have to keep track of your portfolio. Know what is happening. Know what's the average cost at the moment. Knowing you what you want to achieve per se. So yeah, continue, Justin.
Because, for example, 2019, when we were one of the best performing stock exchanges in the world, we had a lot of companies performing spectacularly, companies flying up, and a lot of people would have fallen victim to looking for it and say, yes, let's go, want it to go a little bit higher, want it to go 10 more percent, 50 more percent, 20 more percent. Whereas some people would have just taken their gains and said, all right, cool, take it, put it down, and then wait for the next opportunity to reinvest
Yeah,
it in. And some people would have had those gains right up until March, where the market starts to dip. At which
yeah,
point, oh no, I was up, I don't know, 80%, and now I know I'm down 40% from where I started, and then they sell out. And then they lose all that money because what? They didn't have the goals in mind. They lost, and then now it's that much harder for you to get back to where you were and then to get back above where you were to the appreciation. All right.
and we'll talk about that a little later in other slides where we talk about the fundamental versus the value investing.
Exactly, exactly. So last point, it's just as I said, make use of social media. For example, I use Google Alerts. So I'll go into Google and set alerts for all the listed companies, and just so any article that gets posted or any piece of news that comes up with that company, it gets I get an email, I get an update in my Gmail. Um, the Trinidad Stock Exchange, for example, sometimes for some of the cross-listed entities, we get some news faster over there than before it reaches to JSC. I'm not exactly sure why it happens all the time, but it's good to know. Right? Sometimes you may be ahead of the curve by just a couple of days or just a few hours, and sometimes that's enough. That's enough to make so much of a difference.
Yeah, that's a gem right there.
Right? So, that was one of the things I mean by tracking the financial portfolio. So if you want to get ahead of the curve, or at least want to have a better representation rather than waiting for the company to declare how much they have or how the value has increased or not, in like QWI, for example, a portfolio that it's an investment company that holds holds certain stocks, right? So they have local stocks and US stocks. And so what I actually did was I went over to seekingalpha.com and I made a portfolio for all of QWI's holdings. So on the left, you'll see they have Adobe, Home Depot, Nvidia, which actually did really well today. If you can check on that later, I'll post a link. Amazon.com, MasterCard, Facebook, and all that, right? You actually have the holdings, how much they had, the value in it, and then I just transcribed all of that over to Seeking Alpha. And so I can see the daily changes, or whenever I'm ready to check on it, how much the stock has moved. So for example, what's notable here? Adobe is almost down 2% for today, and that's one of their largest holdings. So for example, if it had gone down 20%, then that would be a point of worry. So if I am a QWI shareholder and I see their US holdings just going down, if I see their, or just the same for their local companies going down, especially if it's their top holdings, doesn't look too good, then that might be a signal for me to say, hey, maybe I should reduce some of my exposure to QWI. Maybe I should pull QWI until I'm seeing better days or whatever, because it doesn't always get reflected immediately. It's tracked through the net asset value, but these are some of the things that you can use to take note of. All right.
Yes, so as an investor, following some of these um, market weighted funds and funds that we call ETFs. So basically, NAVs usually are updated daily. So we can see that posted on JSC, JamStockX daily, what the NAV is. And the NAV can change daily because stock prices fluctuate daily.
Exactly.
So we can look just like what Justin was saying about saying, okay, if one stock does not perform well, is it a sign that should I reduce my portfolio? But also, again, looking on companies, if you look on what they have in their portfolio, you can look at it from a point of view that, okay, they have Adobe as their top holdings. And you look into yourself and say, what type of company is Adobe? They do cloud computing, and all of that. So you're like, okay, interesting. Cloud computing is a new step into the world, into the new world that we're used to. Amazon also is into cloud computing and e-commerce. And we have Facebook here, which is another company that's synonymous with both cloud computing and social media management and integration. And we look at NVIDIA, with NVIDIA as the semiconductor chip giant, basically. So when we're looking at all of these are very mature companies, and these are companies that have time and time again produced very good performances. So we can even get a hint of the type of investors or the type of investable stocks that QWI is interested in. Home Depot, and look at that stock. I mean, it's a good pivot play for this type of environment. We can say, okay, They have all of the equipment that people would need to stay at home, the utilities, the power tools, because a lot of people have been interested in, as we see with the US markets, constantly, even during the pandemic, home sales have been rising because people are looking into different asset classes, maybe because their stock portfolios have been taking a hit. So stuff like that, I mean, it's always important to keep in mind as an investor, not just looking on the company itself, looking on what the company holds. It allows you to see what's the fundamental view of the company, what's the various different avenues this company is going to take in order to gain a profit for its investors.
Exactly. Right, exactly. Right. So, and this is further on, you get some further information about that these holdings on the left, these top 10 holdings represent 74% of their local holding of their local investment. On the right side, they have 41% invested in these 10 holdings right here. And then they go on to say that they hold these USA listed securities for short-term trading purposes. So you know the management, you know their reputation, you know, well, you should have known through your research how well they are or how adept they are at investing. So especially with the especially with changes between quarter over quarter, you can see how much they would have trimmed the position by, increased its position by, depending on the movement of the stock. So for instance, Amazon, right? Amazon is a huge e-commerce giant. So going forward, you can expect in December that, you know, Amazon will do pretty well financially. And then you can expect that when the share prices move up, that QWI might decide, all right, cool, we've attained our goal, we've met where we want to, and then now we might trim this position a bit just to clear some of our gains, right? I can't speak on them on their trading style, but I'll just say that that
That's
is
just an example of a
just
trading style. Because at the same time, it can be the flip side. And that's why we have fundamental and value investing. They can
exactly.
see it and say, okay, I realize that this stock will grow even bigger based off of their plans. And even though I am at a position where I meet my target goal, I may just take 50% of my gains and leave the rest because I want to buy more shares at current price because I still see it undervalued from a value perspective. But from a fundamental perspective, it has ticked all my boxes so far. So, different investment strategies.
Exactly. All right. So I think we pretty much covered everything here. Or other than just pay attention to when they would have reported these. Pay attention to what into them so you can have an idea of the prices or and to see how much it's gained or depreciated by, and then can move on from there. All right, just to keep abreast of this information. So here's a screenshot of the Trinidad and Tobago Stock Exchange. Um, I have the URL up there in the top left corner. You can head on, check it out in your free time and just, keep checking on it. Cool. So investing tips. So you need to, as an investor, you need to understand the industry that you're investing in and to believe in its product, right? And this doesn't mean to just understand the industry or just understand, say, okay, I know that Wisinko makes water bottle, right? Wisinko makes water. It's more than just that. You need to know what the industry is about. You need to know things like the distributions. You need to know where it's distributed. Where's the lead revenue earner for them for their products, right? So for instance, when COVID just came and everything was in lockdown mode, a lot of people, even when we had mandatory shutdowns for some businesses, and it was declared that Wisynco was, essential company, right? People just assume, say, okay, well, yeah, cool. Wisynco should be doing great. They're essential. Everybody drinks water. That should be fine, right? But but what you would have missed is how many events WeSync actually goes in and earns from. So, for example, without other parties, events, when we weren't having as many, uh, weren't having as many tourists coming in to go to our hotels or different places of business where you know a lot of entertainment would be taking place, these companies would have been losing out on that, right? A whole lot
And
of money.
also to remember that Wisynco, unlike Seprod, Wisynco still had somewhat carried on their sugar operations through their Worthy Park acquisition, which was made. And that, as we see in recent news, is becoming unprofitable for them also. So they're in talks with Appleton in terms of that agreement to cut its sugar operations. So that, of course, has some impact on Wisynco because they have the distribution agreements with Worthy Park to distribute some of these spirits and so on. So that in itself again is a sign that not much pivoting could have happened for Wisynco during this period. So
Right.
yeah.
Yeah. So
So
it's very
moving on
important
to
to understand.
fundamental and value investing. Just as me and Justin were talking about before, about what type of investor you are. We can say a lot of us are very synonymous with fundamental investing. We look on, just as Justin said, we think of water, you know, a lot of juices, the sparkling cran water that we drink, you know. I mean, a lot of these stuff that we interact with day to day, and we can say, okay, this company, we see that it's putting up a new warehouse, all of that. We can say, yes, this company has taken a footprint into Jamaica, and we're seeing the brand everywhere, which means that obviously it's a company that's growing or at least trying to grow. So it makes us feel good. And these are fundamental qualities that we look into and we say, okay, what is the company doing? What is the company about? It gives us like a good synopsis to say, okay, this is why I'm buying this company. Because it appeals to this certain sector and it also appeals to the country on a whole. It will benefit the country. So we look on it and say, okay, in the next 5 years, we should see more, more, more factories going up, more manufacturing zone, more distribution agreements going up because of the size of this company and their appetite for acquisition and appetite for expansion. So stuff like this we use in fundamental investing. And when we're talking about value investing now, we tend to get on the more technical side of investing and say, okay, is this product now at a price that it's worth it? So we want to look into PE ratios. We want to look into various different aspects of the company that gives us more technical ability to say, okay, is this company performing at the level that the market is trading it at? Will I buy it at this level or do I say, okay, no, I am waiting for a pullback or I am looking on the other companies inside that sector to say, okay, are they performing at an equal ratio or are they competing at an equal ratio so I can accurately get a value of the
Right.
stock
Based on
so
the
I can
metrics,
say,
it's
okay, I will
overvalued or
now
undervalued.
purchase.
Right. Right. You know.
So on to the simple and technical analysis, Justin.
Right. So what I have here is a little graph that really gives us an idea of how price action moves in terms of what people are willing to pay for a particular security, right? So here we'd have seen price went down a bit, found some support at this price right here, and then had a little rally before it come down again and say, okay, cool. People aren't willing to sell for any less than this price, or people are very enthusiastic about buying at this particular price. And that's what we call a support, right? So from then on, moved up and found resistance at a point where people say, hey, this, and then people saying, okay, let me take some gains right here and to, sell into the market, or people say, I don't feel comfortable paying any more than this price right here for this particular security, right? So that's what we call resistance. So it's hit a ceiling of sorts where the price just doesn't seem like it wants to get any higher, and then people start to speculate. People start to get a little bit, you know,
Antsy.
a little bit antsy right there. So somebody starts to say that, well, this doesn't look like it's going up in higher. So let me start selling here, and then some people start to follow the lead, and then people end up selling it down to whatever price a floor forms at, whether it
Or
be because
support.
right at the support, right? So what would this look like in the queue? For example, if you have JTrader, you go into the queue. Support and resistance can sometimes look like massive blocks, right? So these are temporary holding positions held by large numbers of shares, either trying to be either where people are trying to buy or they're trying to sell, and there's just not enough volume to clear these blocks at a point. So price gets stuck either up there or down at the support, right? And this happens all over. It happens pretty much anywhere you see securities being
Anywhere.
traded. There's a
Yeah.
chart, right? It's pretty much how that works, especially within stocks. So pretty much technical analysis right there. Price action works where you have uh, people
It's
buying
the
out,
same thing that we explain here for the price action movement,
right,
you know, with the support and
and
resistance.
resistance.
Basically, you're looking on the chart that we have up here. When Justin was talking about the resistance, about people not willing to move any higher, what can happen is that you can have a break of resistance, because at that first level that we see at the bottom of the chart, you can see that resistance is broken and it is tested again. It is broken. Investors say, okay, you can move your mouse to the chart for me, just yes, right there. The resistance is broken up and
Right.
it comes back down right there to touch back that minor resistance again. So it's broken, it's tested, and then the market decides, okay, we're going to shoot again until it hits another resistance
Okay.
and forms support elsewhere. So this is the value of technical analysis. You can understand where the markets are willing to push to and where the markets are willing to go down to. So you can now have an idea to say what are the support channels of the markets? Where do the markets identify this stuff as a buy or as a area where investors aren't willing to push it either higher anymore or lower anymore? So this
Exactly.
sort of analysis gives you an idea
All right.
into how the
Pretty much it's a representation of
yeah.
the psychology of the traders, right? Just in graph form. Yeah. So from then, investing tips. So as we move on a bit further now, it's important to remember that investing is for the long term, right? That's the whole definition of the thing. Investing is long term. While stocks are normally seen as long term securities, even though they can have short term benefits where you can take your profits and move on and repeat the process over and over, it's important to remember that investing is you making use of your resources right now to benefit you going forward and to benefit you for a lifetime, maybe even several lifetimes, to benefit your children, your grandchildren, and the rest of the lineage. Right? You need to know your risk profile. I'm sure you've heard it all before. Don't invest money that you're not comfortable losing. Me, I'm not comfortable losing any at all, right? But I'm not going to throw my entire life savings or throw everything I have or sell my house, sell my car, and throw that into the market. Even though you have people that do that,
Yeah,
and
and that's okay by their standards if they're willing
right,
to accept either the consequence or the benefit that comes with it.
benefit.
But knowing the risk profile is very important, because not everybody is willing to even, let's say, play the stock market very heavily. Some people want to have a balanced portfolio with, let's say, just 5% of stocks in it because they cannot manage the idea of having certain fluctuation or movements in that side of market. Like for
Right.
example, when COVID hit and our market went as low as minus 30%, the entire main market, some people would absolutely go crazy at this, while some people will see it
You
as
know
opportunity
that
for buying. So it's
exactly.
important to analyze yourself and be like, okay, what am I willing to risk? How much am I willing to tolerate during that risk? To say, okay, I and I don't want to see my portfolio going down anymore, so I'm willing to cut at this point, or I'm willing to hold through this rough point because I believe in this industry, I believe in the security that I'm holding. So that is a very important part of investing, and that is why it is always encouraged to have a balanced portfolio where you have stocks, fixed income securities, bonds, etc. But it all comes down at the end of the day to what
Your
you
risk profile.
is your preference, because it's not a necessity that you have stocks, bonds, and everything. However, it should be noted that there are certain risks that come with certain securities, and there are certain upsides. For example, if you're holding a short-term investment of a certificate of deposit, you shouldn't expect gains of anything over usually 5%. So it's just what you're willing to tolerate, what margins you're willing to move up at, and understanding what you're willing to put on the line, how much skin you want to have in the game.
Exactly. All right. So there's a way you can go about it. So for instance, you get paid at the end of the month. When you get your pay and everything, you can look at it and say, okay, 50% will go towards, my general upkeep, rents, bills, car loan, what have you. And then you can say, okay, cool. I can then now take 20%, 10%, 30%, whatever you're comfortable with, and use that to invest. And then every month, if you're that type of investor, you can use it and invest it in. You can take it, you can be, it's really up to your personal preferences, and then to just make use of it, right? But most importantly is to invest, right? And then to familiarize yourself with the various securities, as David was saying earlier. So you know what the risk appetite is. If you're the type of person and say, okay, I'm looking for some extraordinary gains, you know that a certificate of deposits isn't necessarily your thing. Or if you're just looking for, all right, if you just want to go with the market average, then maybe a unit trust might be within your
Yes,
appetite. Or if you're the type of person that's okay, cool. I feel like I've done my research. I feel like I know what I'm looking for, and I feel like I'm able to get the gains that I'm looking for through the research that I've done. Then you can put that into stocks, and then be well onto your journey.
yes, and also if you have the means and if you have the tolerance, you can combine it in all.
Okay.
You have some in stocks, some in bonds, some in certificate of deposits, money markets, etc. I mean, investing is it's similar to a
It's
game.
no one
It's
size
just
fits
how
all,
well
right?
you, yeah, it's no
Right.
one size fits all. It's what you, there are so many products on the market that can be tailored towards what you really want as an investor. And
Exactly.
pretty much almost everything is available there for every type of investor. There is. So it's all
Exactly.
up to what you feel comfortable with at the end of the day. But the key is to always stay invested. Always be invested.
Exactly. Exactly. All right. So that brings us to just about the end of our presentation. So follow us on our socials, everybody. Instagram at 876invest, Twitter at 876invest1, website www.876invest.com. You can follow us there and see and check for updates, check for additional forums such as this one. And just once again, thank you so much for having us. Big up to the people from Learn and Grow, Learn, Grow and Invest. Jeremy, thanks so much for having us. Let me just in bed.
So any questions?
Yeah, well,
Online.
we wanted to see if they have any questions, but I mean, they can always leave it in the comments after the video is posted. So guys, thank you so much. I'll ask you though before we go, is there one, like if for everything that you've shared here tonight, is there one key thing that if you're a busy investor and you don't have time to do everything that you just mentioned, one thing that both of you would say that you should focus on? Is there anything like that?
Okay, so if you're a busy investor, having no time for the market, you just want to, once you start putting your money, that's it for a particular period until you plan to check back again, let's say a year or two.
Yeah.
So for that type of appetite, as a aggressive, moderate to aggressive investor, you can look at it and say, okay, I will now put my money into a unit trust. This is not investment advice, by the way. However, unit trust. So a lot of these unit trusts on the market, they have holding periods like Sagicor Sigma Equity of 90 days. So it's not something you can go in and come out instantly. And it tracks the performance of the major index, and it's a pool fund. So it has almost every listed equity that is on the market. So right there, we're able to mitigate a lot of the issues that may happen with a singular company, and we have exposure to the entire index on a whole. And so far, previously in 2019, we've seen the index grow over 29%. So it has delivered appreciable gains for investors, similar to which is last year was even more than the S&P, which on average yearly delivers approximately 12%. And a powerhouse like Barita delivered last year, what, 40% for investors? So unit trust has its benefits. I mean, as an investor that wants to not necessarily be on the market every day or analyzing everything, why not get everything?
All right.
Yeah, I agree with that approach because personally what I do and I don't, well, in the past I wasn't a fan of unit trust, I'll admit, and that's just because I think that a little bit of time invested at the start to research some solid companies, buying them, holding them, even if there's a period that you can't invest a lot, you stand to do a little bit better. But there are many types of unit trusts. So, definitely scope them out. I lean towards the equity funds and not so much the unit trust because the equity funds tend to do a little bit better than the standard unit trust. So just research them. The point is still valid though. If you're busy, you don't have much time, definitely at least have the funds working for you. So Justin, what's your take on that one?
My take isn't so much as where to go to and invest, so where exactly to go and pinpoint, but more to be ensure that you're tracking your investments. So say for instance, you're a busy investor, you invest a couple times over the year, or once a month per se, right? Even though you don't have time to be checking up on the market every day, checking the glean on the news or even the updates that you might have signed up for and feeling a little bad about it. What you should be doing is from time to time, check your trackers. Know how much you are up, know how much you are down by. From time to time, it could be once a week, could be whenever you have the free time. And say for instance now you see a big dip in a stock that you have, then say, okay, cool. Do I want to do I want to jump out or do I want to continue buying as it goes along? Because I believe in this company. I did my research. It's a bit down right now. Great. Great opportunity to average down and to continue going forward. Right? Trust me, by the end of the year or by the time you reach your investments period, you reach a goal, you'll see the difference.
Yeah, agreed. So um, yeah, that approach definitely helps as well. So and it fits into what you guys were saying earlier about knowing your investor profile. So we actually did a video fully on investment profiles, understanding the different risk profiles that exist. So, feel free to check out our channel for that one. But in my case, for example, I invest in companies that I can hold maybe for 3 to 5 years, sometimes even 10 years. So averaging down is a strategy I use a lot. So I'll try to add, so if it goes down, 20%, as long as the fundamentals remain the same, then I'm adding more. If it goes down 40%, fundamentals remain the same, I'll add more. What happens though is that depending on what's happening within the environment, if there's a period of uncertainty, I'll take some profit, wait a little bit, see how it goes. Then I may go back in, because there's nothing wrong with doing that as well. So there's nothing wrong with selling at $10 and buying back at $5. It really depends on you understanding the ebbs and flows of the market, because if you sell it now, it doesn't mean you can't ever buy it back. So sometimes there's this fixed mindset with investing where you feel like once you sell it, it's sometimes hard to buy back a stock that you've sold. You feel like, I bought it at $20. Exactly. So we have to kind of remove our mindset from that way of thinking. It's just a transaction. It's just something that I've done the research, or I have good information. I'm going to take this move to grow the funds that I have, All right, so we have a couple of questions here. So first question is, what are good apps to track investment?
Okay. Locally, it's to track investments. If you want to do it in terms of the information that comes across, then you should be looking towards the news apps, being L.E.A.R.N, Loop News, Observer, and then, like I said, you can set Google alerts for tracking your portfolio. I can include a link after the video, and you can check on that yourself, right?
Okay. And usually what we do as well, and I wanted to ask you guys this, if it's okay with you to share the presentation, because we do have a Facebook group that we share any attachments or presentations that we have here in our meeting. So if you're comfortable with that, just send it to me and I'll upload it to the Facebook group. And first, everybody's welcome to join that group. You just have to answer a few questions and then you're welcome to join. So okay. David, what apps do you use?
Okay, so the same tracker that Justin spoke about to track the portfolio, it's basically like an Excel sheet, and it has all the values already, so it's automatically updated once you put in your stock ticker, and you can put in the amount of units you have.
And the
amount yes, and the amount that you paid for it, it basically updates itself to show you what is the current value, and shows you your basically your ROI as your stock. Are you in the red or are you in the positive? So that Excel sheet is pretty good.
Yeah, I use Excel as well. I do have some apps so there are some stocks that I watch that I will just keep an eye on, just because I do look at short-term opportunities to trade. So I try to get an understanding of kind of the range that a stock will trade in. So I'll use I can't remember the name right now, but I'll post it below, that I used to watch a local market. I just use Blockfolio for cryptocurrency, and I use, oh my gosh, I can't remember the name of it, but I'll post all of that below. I do use Excel though to manage not just my investments, but my net worth. So I have one sheet to track investments, expenses, all of my account information. Denise says if she can get the Excel sheet. My personal Excel sheet, I can probably just strip it down. Yeah, I can probably do that. That's no problem. All right, so there's another question from someone about, well, Denise is asking if there are any insights on L.E.A.R.N's upcoming APO.
Can
If you
can
can't,
we
just share. Second.
No, well, we are waiting on the prospectus for that one.
Okay. No. Fair
Yeah,
enough.
we
All
want to
right.
make it on the prospectus until we make a decision on what there is to come because we want to be able to appreciate what the company is going to woo the market with, as I would
Yeah.
call it,
Yeah, exactly.
and what is going to be in it for you as the investor. So we'll hold our thoughts until that time. However, I'll just say for now, L.E.A.R.N Trading, I like the company. It's a pretty decent company and they are always hungry for acquisitions. And I personally think that it's a good company going forward. They did fairly good during this COVID period, so it will be interesting to see what
What they are going for.
this APO contains. So I'm interested to see.
Yeah. And as you guys were saying before, it's good to kind of track the news and information about a company. So now that you know an APO is coming up, look back at the last 6 to 12 months on the news, what the news has been saying about the company to understand the trend as to anticipate where they're headed. Because you can't put every single possible piece of information within the prospectus. And sometimes you have to rely on the additional information to give you the bigger picture. So yeah, I agree there. There's a question. I don't know if you can answer this one. It's asking, who do you think is exiting GK at $57 to $58? Is it Stanley Motor and ATL pension? I don't know how you can possibly answer that question.
Well, what I would say to this person is don't focus too deeply on the who, unless you're trying to focus for things like acquisitions or for things like that. Don't focus too much on the who, but try to get an idea of what's going on at this price, what is the purpose of the person trying to exit. Well, it doesn't have to be a big corporation, right? Grace has been around for many, many, many years, and it could be just a person with deep pockets who has been investing for quite some time, who's just taking some gains at this present moment. Right?
Exactly. So I always
Yeah,
think
man,
that
definitely important to note. There's a lot of portfolio shuffling happening all the time. At various point in times, various institutions and various investors, they have periods where they take a view of their portfolio and they now start to begin to make changes, whether to increase, downsize, to take gains for other opportunities. So sometimes it's not a lot to look into. It actually is interesting sometimes, whether it be a sell or a buy, it gives more insight to the activity because as we can see, Grace has really done well during this pandemic. So from just a fundamental point of view, you'll be saying in your mind, if I have shared so long, why would I want to just sell them right now? So looking at that high volume, sometimes it's usually just portfolio balancing, nothing to look into. And I mean, the company is doing well. So is this going to cause you to be like, okay, they're selling out this amount of grace, so I'm afraid now?
Yeah.
Definitely, this company has been around through the toughest of times and they've survived. So just look at it as possibly a rebalancing and just say, okay, where's my next entry or
Mhm.
something that is coming
so.
up next for the company?
Agreed. So the key thing to note here, guys, is that so for some of us, or at least a lot of us, someone selling 1 million shares, for example, may be a lot because we don't own more than like 5,000 or 10,000 units. But to the person with 10 million units, 1 million is not that much. So you could be selling a small portion of your portfolio, and the market thinks it's this big move when really it's not. It's not really amounting to much. And as you said, it could just be, there's so many different possibilities. Again, if there's nothing really major happening, nothing fundamentally changing, just have kind of a sober view. If it is that, maybe even that person bought it when it was $10. You don't know. You know what I mean? So me selling at $57 when I bought at 10, that's more than more than enough money for me to, take some gains or whatever. So you never know that information because even sometimes, the entity selling, you may not know the reason for selling. Selling
Exactly.
is not always a bad thing. You only realize profit when you sell. It's all unrealized until you sell. So at some point you have to exit the market. Otherwise, you have nothing tangible to show for what you've invested. So just kind of, it's important to know what your targets are, to what prices you're comfortable with, and just look at, if you look at it from a high level, look at the last, year or 5 years, you'll see that, this is standard stuff. So yeah, I'm looking to see if there are any final. Oh, so John was saying he was trying to time the entry. I mean, so go back to what they were saying about the technical analysis piece. So you won't be able to time the bottom. So what you want to do is look at a reasonable price based on maybe the all-time high or where it's been within the last couple of months. If it has gone down maybe 10%, 20%, 30%, anywhere around that time, maybe a good time to buy. It really depends. If you're going for a short-term trade, understanding technical analysis is the best way to go because based on that analysis, it will tell you the best time to go in based on the charts that you've pulled up. But otherwise, it's very hard to time the bottom and it's very hard to time the peak as well because somebody may say it's gone up for weeks now, it's not going to go any higher. You sell and then it runs on even further. You just don't know, you know. All
All
right,
right.
final question seems to be, what are your views on using a brokerage company like Barita for pension or retirement funds? Did I say that right? Yeah, I'll put it on the screen.
Well, um, in terms of saving up for a pension, my I haven't really given that too much thought per se, to be quite honest with you. However, Barita is a good company for a couple of reasons. It gives access to JTrader. They have pretty good customer service from my experience. And so if you're of the impression that you want to continue investing, buying stocks, and to use them as like a lifelong broker up to the point where you want to get onto the point where it's for your retirement, then that's great. That should be fine. Yeah.
Okay.
Yeah.
And maybe I'm old enough to answer that question. I don't know, but what I recommend is that, I mean, again, just kind of look at how the company invests. So usually for a fund, they should tell you what they're investing in, what percentage allocation, because sometimes the funds aren't equally weighted. So look at what's in the fund, look at the performance of the fund for as far back as you can go, and compare that fund to other brokers in the market. So um, what I kind of do is look at that information and do an average. How has this fund done over the past 3 years? Then I make a decision to say, well, okay, I trust them to give me X percentage return on this investment over the next few years because don't look at their best year, don't look at their worst year. Do an average because it doesn't, just because they did 40% return last year, for example, doesn't mean they're going to do 40% this year. So look at an average and then, if that average is 20, 25%, see if you're comfortable with that, then make a decision. But for retirement, it's set an amount that is enough that you're comfortable with, that you won't need to touch for 10, 20 years and just set it in. Anything really for that long is going to be tax free. So that's great. And then you're good from there. So aim for at least 5% of your income. If you can do 10, that's great. Just be consistent with it.
Perfect.
Yeah. All right, guys. Thank you so much. I'm going to, yeah, just say, well, I think you've shared your areas for contact already. Their tag for IG is in the comments below. feel free to reach out for them anytime. It's always great to hear from you guys. I've learned a lot, and I've been investing for a while. I learned a lot today, so really do appreciate it. And yeah, any final words?
Uh, think that's about it. Yeah. But thanks so much,
Stay
Jermaine, for
invested. That's
staying.
my final word. Stay invested.
Yeah,
Yeah.
yeah,
Thanks so
yeah.
much for having us, guys. We'll be happy to come back anytime again and stay investing. All right. Great.
Yep. Thank you.
Thanks.
Thank you. All right, guys. All right. So thanks to everyone for joining us today. I'm just gonna make a final call to join us on our Facebook group. If you haven't done so yet, subscribe to this channel, share this video for us, please. And yeah, feel free to tag us on social media if you have any investment questions. If there's anything that you want to know, if there's a topic you want us to cover, tell us in the comments below, not in the chat, but in the comments below the video, because the chat will disappear after a few hours. And I want to thank you guys for watching and for joining us. Just checking to see if there are any more questions. No, I think that's it. But yeah, guys, thank you so much. We have some more videos coming up, so stay tuned to our social media. We have well, we have a lot of things planned. That's all I can say. So just be sure to subscribe and turn on the notifications, because we're gonna have another video coming up soon.